Friday, September 5th, 2025, Maneco 64, home of alternative economics and contrarian views. Good morning, Clive.
Good morning, Mario. Good morning to all your viewers.
Yeah, thank you. And Rudy says good morning as well. He's asleep. But anyway, Clive, I want to start with something I noticed on a chart of the Dow Gold ratio, and it's something that it's quite rare and it's happening now. And the last time it happened was in 2007, in September 2007. And in 7 months' time, gold went up like just over 50% from around 650 to just above 1,000. And of course, you remember well, in September 2007, during that time, the stock market topped and the great financial crisis like kicked off. So I was just looking at the Dow Gold ratio because I'd been following the price action in the last few months because as you see here, we dropped quite a bit in April and then we rebounded and we've had a consolidation and a rising wedge. And I was waiting for this to break below the rising wedge, and it has, which is very bearish. So that this means that I expect gold to outperform the stock market in terms of the Dow. It could be gold going, excuse me, it could be gold going up faster than the Dow, or a combination of also the Dow going down and gold going up. And then I looked going back because this is a monthly chart, and I saw we had the same kind of let's say formation back in 2007. And this is what I mean here in September, that we broke out of that rising wedge and it was good night Vienna, so to speak. And this is like where we bottomed here in March. We went from around 20 to around 11 and a half. And yes, gold went from around 650, 700 to just above 1,000. Yes, it did continue that ratio to go down eventually in 2011 to like around 6. And Clive, if you look here prior to this, there's like a top of the Dow Gold ratio in the late century and early 2000s. A little bit like now, we've seen kind of a rounding top. So am I saying we gonna have a new crisis? Could this be pointing to a new crisis? It's possible. Nothing like you know, Clive, is certain in life or financial markets. But one thing that I think it's pointing to is gold will do very well. And I calculated if we go up 50% from here, we'll be around 5,300 by March. And Goldman Sachs has come out, I think yesterday, saying that they see gold going to 5,000 if Trump, yeah, challenges the Fed more. So I want to have your take on that. I know you don't look too much into technicals, but that would be interesting to start with.
Well, I do find the charts always quite complicated to understand, but they can be, if you already have a view on a share or a metal, it can be confirmation to what your study. So in this case, what you've got is a confirmation of your already held view. So I think that's reassuring. And if gold does do what you said, which I think it will, I mean, maybe not as fast as that, but if it does, we're going to get to a much higher price. I think you said 50%, something like that added, will take us to $5,300. And by March, that would be incredible, wouldn't it, if we get to $5,000? But I think what's going on here, in terms of gold, I think there's a growing worry about the dollars people are holding. People are saying, I'm holding the dollars And in the past, dollars were a sure thing. It was steady. You could trust it. It was still going to be there tomorrow. Everything was going to be the same. But I think people are getting to the point where they're saying, you know what? I honestly don't know what's going to happen tomorrow. There could be something comes out of the White House, completely unexpected and crazy. And we've had a lot of crazy stuff since January, and people are starting to say, well, do I want to be in something where I can't have a certainty that everything's going to be the same tomorrow? And I think they're looking for alternatives. They say, well, nothing's going to happen to gold. It will still be there tomorrow, whatever happens.
I agree. Aside from the uncertainty coming from the administration, I think people are starting to realize that the dollar is just like any other fiat currency, and it's losing value, and that over the long term, it doesn't hold its value. So there's only one thing that is big enough and liquid enough and has a track record of doing so over the long term, and that's gold. Clive, and talking about the Fed, some people might have seen these mugs. It's like an end of Fed mug, and it's got Rudy here. And on the back, it says, this Federal Reserve Act establishes the most gigantic trust on earth. When President Wilson signs this bill, the invisible government of the monetary power will be legalized. The worst legislative crime of the ages is perpetrated by this banking and currency bill. And that was Congressman Charles Lindbergh Sr. That's supposed to be him here. He was the father of the aviator, Charles Lindbergh. He was the first man to fly solo from New York to Paris. I think it was 1927. So he was a lot more famous than his dad, but I think his dad is quickly becoming famous. And the reason I'm talking about this is because some of you might not know, but we do have a merchandise store where you can get all these kinds of mugs and visors, hats, t-shirts, and even cushions, bottles. So if you're interested and you want to give a friend something like this, yeah, something like this,
Okay.
check out the Rudy collection in the merchandise store. I'm gonna try to think, Clive, of doing other things like because it's a good educational thing, isn't it? Maybe something like, the mo money is the most marketable commodity or things like that. So anyway,
Yeah, you want things that people would like to show their friends, whatever that will be.
yeah, yeah. Clive, talking about holding something that uh, keeps its value. I saw a story, and I think I'd heard this before, but it just caught my attention because the FT reported it like top headline. Stablecoin group Tether holds talks to invest in gold miners. Boss of crypto company that posted first half profits of 5.7 billion has called the precious metal natural Bitcoin. So I was reading the article, and he says he likes to look at he says people say that Bitcoin is the digital gold. He likes to look at it the other way, that gold is the natural Bitcoin. But whatever, I thought that was really interesting. And yeah, I'm not surprised that the digital crypto or altcoin world is getting in bed, so to speak, with gold, especially the fact that gold is very stable, even though people think it's volatile, but it's not. The other thing gold has done, Clive, since Nixon closed the gold window, is that all fiat currencies have gone down over 90% versus gold. So it seems to be a good place to park your funds. And
Well,
yeah, go ahead.
Tether's making over $5 billion a year in profit, and it's got to do something with that surplus profit. And I think for the most part, it's buying treasuries with the surplus profit. But I think in a way, Tether would probably like to buy gold because they're into that tangible asset in a certain sense, i.e., Bitcoin in their eyes, and I think they like to diversify to gold. They probably don't quite dare do that, but going into gold miners is kind of more acceptable. Of course, they've got a lot more upside if the gold price does go down. They only have to buy a small amount of gold. Sorry, if the gold price goes up, they only have to buy a small amount of gold miners to get the same capital gain that they would get by buying a large amount of gold. So I think that's the strategy to try and get exposure to gold through the back door. But
Oh,
I think it
Clive,
would be,
I have to correct you. It's a good correction. It says here Tether has already amassed a significant position
oh wow, how
with
they got nice.
$8.7 billion dollars in gold bars in the Zurich vault, according to financial statements, which it uses as collateral for its stablecoin. So there you go. It's kind of
Well,
by gold, Tether. The one thing about Tether that I will have to be honest with you, Clive, and the viewers, is that I have a problem with them because they've maybe that's changed, but they've never really done an independent audit. So it would be good if they did. I would be more comfortable with it. But that's very encouraging that they've got gold bars, in my opinion.
I'm just wondering about that because didn't they pass a law very recently in the United States saying that coin companies had to have a regular audit? I don't remember.
Yeah, but they're not US based, Tether.
Okay, all
Yeah,
right.
I think they're Bahamas based. Yeah. So
You know, I know they've got a statement from auditors published every month, which certifies their holdings, but it's not an audit statement. It's not an audit of the
yeah,
company.
yeah, that's right.
It's an audit of their holdings, which is not quite the same thing.
Yeah, and then there's a tweet here or a post from Vince Lancy. I've interviewed Vince on the channel a couple of times. Yeah, if you want to follow him on X, it's at Soren the K VBL's Ghost, and it's kind of the same topic as gold and Tether, but this is more to do with El Salvador. And he says, Vince, I'm telling you guys, China and the US are working together to slowly deconstruct the global marketplace and create a bifurcated world. This is a complete a controlled takedown. And El Salvador is the proof. They're friends with the US and they're friends with China. The world's going gold and Bitcoin, or gold and crypto or stable coins, I would say, because it looks like El Salvador has bought gold as well, 50 million worth of gold. They've been buying Bitcoin, of course.
It's amazing. So yeah, I think the whole world is going to go in a different direction. I think it's going to be de-dollarization in every sense. It won't be overnight, but it's going to take time. But I think countries around the world are saying, why do we have to be so dependent on the dollar when things could go wrong with it?
That's right. Not just the dollar, but all other fiat currencies. I think what's going to happen, we're going to go back, Clive, maybe to what it used to be like in the 19th century. It was a pretty. It wasn't like they had a conference after the Napoleonic Wars and like a Bretton Woods. It just evolved organically, a gold standard, and all currencies had gold backing. You could also redeem currency for gold coins or silver coins. And I see going forward, people being able to yeah, ask for delivery of gold coins, or maybe it's going to be 1 gram bars, 1 ounce bars, or there are 2.5 grams, 5 grams. So that's the way it's going to be. It's going to be like a very neutral. There won't be coins, and yeah, that's the way I see it. And hopefully, I mean, I like the Tether, the fact that it's a private company. I know it has its pitfalls. It hasn't done an independent audit, but I'd rather have private companies issuing and yeah, issuing currency and having reserve assets like gold, and if they want to have Bitcoin and other stuff as well, or treasuries. But I think treasuries pretty soon, I think Tether and other stable coins are going to realize maybe it's not a good idea. But I'm sure, Clive, that governments will try to keep control and central bankers. It will be a battle, really.
Yeah, there's going to be a battle between the investors who know what they want and the government who wants the investors to do as they're told.
Yeah, the control. I mean, if you can control the currency, you control everything. If you leave it to the market, uh, politicians, yeah, politicians would become just subservient to the public, and they would be our servants, which really should be. It is the way it should be, right? Because I think right now it's the other way around. Politicians are not serving us.
I mean, I think if you're a government and you spend a lot more than you can collect in taxes, then you keep doing that until you see there's a danger with the inflation side, and then you find other ways to grab people's money and say, you have to keep funding us. It was taxes. We can't raise the taxes anymore. It was inflation. Now the inflation's getting out of control. So now, thank you very much. We'll have part of your money. You've got to invest it in government bonds. And I think that's going to come down the line. It's some sort of bail-in.
Yeah. Clive, I wanted to talk a little bit about the number that's coming out this afternoon. It's 2:30 Swiss
And
time and 1:30 London time and 8:30 New York time, the non-farm payroll. And I've got here a comment from Neil Adams, and he's a friend of mine, actually. I used to work with him, and I see him fairly regularly. And he said, BLS, who compile the non-farm jobs number in the US, are under the microscope. The legitimacy of this number will be watched almost as closely as the headline number itself. And he says, year to date, from January to June, 460,000 jobs have been wiped off from downward revisions on top of 800,000 in 2024. He says, historically used by traders, policymakers as the main U.S. labor market barometer, the way the data is compiled is outdated. Yeah, it's a survey, phone calls, surveys, mail-in responses from 120,000 plus businesses, basically unreliable methods. Well, the number is expected at 75,000, which is a weak number, Clive. I think from, if I'm
it's a
not
very weak number.
yeah, if I'm not mistaken, you need more than 200,000 growth to keep up with population growth. And there's a Goldman Sachs came out last week saying that they might come out also with a revision from March last year to March this year, and that it could be as much as a wiping 950,000 jobs. So I think, Clive, the markets are counting on a very weak number. So the danger here is the number is stronger than expected, and we could see the stock market and the bond market come off. But if we see even a negative number, I think that would be bullish for everything. It would be massive. What say you, Clive?
Well, first of all, I think we're going to see at the headline level a strong number, but the market will realize that's a manipulated number. They have a lot of track record almost every month without exception going back for several years. They have manipulated the number to make the current month number look much, when I say manipulate, I'm not accusing anyone of wrongdoing, but it's just a statistical fact that the current month number always looks good because they have revised down the previous month's numbers. So this is what we need to look at is how much is the downwards revision of the previous months, because that will make the current month number, whatever it will be, it'll make it look that much better. But almost consistently, month after month after month for years, they've been revising down the previous figures, always making the current figure look better. So it'll be a question whether the market focuses on the current number, which is just a headline number, so many jobs created, or whether they'll actually look behind the scenes. And I think the market's waking up to the fact that this trickery has been going on for a long time. So I think the market will this time look behind the scenes and try and figure out what the real number is if they do indeed downgrade the previous month or the previous 6 months or year. But I think that the reality here is the number's not going to be that brilliant. We had a different job survey out last week, which showed that new vacancies were falling off a cliff, or at least they weren't falling off a cliff. They were falling, and that means that firms are not hiring as much as they used to. Could be because they don't have such a high need for graduates who would be doing the sort of work which AI can do, maybe. And then we saw yesterday, I think it was, that the number of applications for jobless benefits increased
Yeah.
more than expected, and that was the National Employment Report yesterday. So numbers are showing that more people are claiming unemployment. There's less vacancies, and I think we'll probably see tomorrow unemployment levels going up. Today, actually, we'll see unemployment levels going up, and I think we'll probably see new hires, if you allow for the adjustments they're going to make, aren't going to be very great.
Yeah, and also you had the ADP, which is a private survey for jobs. That came lower than expected. I think it came
Yeah.
out Wednesday or maybe yesterday. And Clive,
Hmm.
as for the revisions, I think the other thing they've been doing for years is that they kind of embellish the first number that comes out, let's say the actual number, in order to manage the markets. I think that's why they do it. And then the next month they revise it down. And in the past, people didn't even notice that. So, yeah, the focus was always on the number coming out for, the freshest number.
Yeah.
But they've done it so much now that, like you said, that people have twigged onto it, and it's a real problem, I think. And it could be maybe what triggers this next crisis, which I was saying could happen. I'm not saying we're going to have a crisis, but that little chart I showed earlier, that formation, the last time it happened was in '07, and I mean, that's when the great financial crisis kicked off. And I'm not saying we're going to have a great financial crisis. It could be different, but it could be one of the things that it could be the little snowflake that gets the avalanche going, so to speak. And talking about the markets, Clive, how do you see gold and silver reacting if we have a strong number, a weak number, or the market reacts negatively to it? And the miners, I mean, we've seen in the last few days that the miners have stopped. I mean, they corrected a little bit. They're still doing really well. Let's say over the medium to longer term, gold and silver have, they've corrected, but like people say, markets never go up in a straight line.
Well, first of all, I don't think it really matters whether the number's good or bad. I think that the gold price is reacting to the greater uncertainty about the state of the US dollar. So I think that direction of travel, which is upwards with its, from time to time, its dips, that direction of travel upwards will continue, I think. And so obviously that's going to be good for the gold miners, which did, as you say, Mario, have quite a dip yesterday. When I say quite a dip, it was a couple of percent down. Some were down more, somewhat less, but across the board it was 2.5%, something like that down. I would expect now, with the gold price being up a little bit this morning, I would expect them to recover. I mean, the gold price now is what, 3,548. It's only up to $2.80 or so. But it wouldn't surprise me one little bit if people don't dive back into the gold price, into gold and gold miners, which had that big dip yesterday, because I think a lot of people feel they missed the boat a little bit on the gold miners. They haven't missed the boat because the gold miners are still very, very cheap by any reasonable standard. But So I think we're going to see gold going up anyway, whatever the result is. But the real focus of the market, if you want really short term, is what the Federal Reserve will do when they have the FOMC meeting announced on September the 17th, in about 2 weeks' time.
Yeah,
It's now regarded as 99.4% probability that the rate will be cut, and I see that by. If I go to the FedWatch tool, can I just
sure,
share that
sure,
with you
Clive.
now?
Yeah, sure.
Let's just have a look. There we are. That's the FedWatch tool. You can see on
On the CME website?
yeah, we're looking at that. That's showing the 99%, 99.4% probability that they're going to cut the rate on what's the date? It's
Seven.
17th of September.
Yeah, and also I think last week, one of the Fed governors, Waller, he said that depending on the statistics, and by that I think he meant the number today, we could have a jumbo cut. So my feeling is that if we get a number near zero instead of 75 or even negative, we'll definitely we could see a 50, maybe even 1% cut, which would be jumbo. And yeah, we're gonna have to wait and see. I think the markets are not gonna do that much until that number comes out. And Clive, talking about miners, don't know if you mind. I asked you the other day because I was looking for a silver miner, and you gave me an idea, and I'm going to share it with the viewers. And this is not advice, or we're not even telling you to buy it. But I asked Clive because I took profit on junior miner, gold junior miner that I did quite well. You know, that's the other thing, Clive. I know these things are going to go up a lot, but you need to take sometimes a bit of profit if things go up too quickly, and that's what I did. And I asked you, is there a silver miner that you liked that you would your number one? And you told me about this one, Andean Precious Metals Corp. So I bought a little bit. So there you go.
So yeah, I mean, obviously, uh, just for the benefit of your viewers, I'll explain how they can do the work themselves in a very, very simple way for gold and silver miner. And Andean is a gold and silver miner, just to be clear. But the way you do the work, first of all, you want to be buying into a company which is already digging up the gold and already making a profit from it. Otherwise, you have a risk of buying into a company which has got nothing more than a hole in the ground. And eventually, with a hole in the ground, they might run out of money. So I always like to buy something which is already making a profit. And that's obviously one of the companies. But the other thing you need to, or hope for, is a realistic prospect of them increasing the number of ounces that they're going to dig up in the years which come. And if you look at this company, you'll see you have to go look at the latest reports, but you'll see that there's a lot of gold and silver going to come online in the coming years, which obviously is a boost. So what I do with gold and silver mining companies, I take the projected number of ounces which will be mined in the future, and I multiply that by the future gold price, which you've got to guess. So, or silver price, depending which way you look at it. So, let's say the future gold price you guess at $5,000. Deduct from that the what they call the AISC, the all-in sustaining cost, which you can find out on every gold mining company's website how much it costs them to dig it up. So, let's say, for example, you've got a all-in sustaining cost of 2,000 to dig it up, but they're selling it for a future price of 5,000. So your profit is going to be $3,000 per ounce. You then multiply that $3,000 an ounce, the profit that they're going to make in the future, obviously based on your guess of the future price, by the number of ounces that you think they will mine at the future date, let's say 2027. You can work that out from looking at their accounts and looking at what the directors say. And then you've now got the gross profit. Knock off something for the other expenses like prospecting costs, marketing, advertising, and tax. If you don't know how to find the figure in their accounts, you can knock off 30%, just knock off 30% for simplicity. So you take the gross profit, knock off 30%, then you have the net profit, divide the net profit by the number of shares, and you get the earnings per share. And then you have to put a multiple on that number, which could be 10 times, 20 times, 5 times, whatever you like. And you'll find out the future share price, which you can then compare with today's share price. And that's the exercise I did for you, Mario. I've done it on
Yeah.
countless companies. I think that's anyone can do it. It's not terribly difficult. And if you don't understand accounts, well, just find a profitable company which will dig up more gold. And you can find out that simply by asking ChatGPT. Take the last accounts, dump it into ChatGPT and say, are they going to dig up more gold next year? That's all you need to know.
Well, next time I'm gonna do it on my own, Clive, because it's not fair. to keep asking you. Maybe you should do a little like just a little let's say note of how to do it, a little manual just so people, yeah, like what you just told us, maybe just write it down. Yeah, that'll.
Yeah, I will do that, Marion. I'll have it prepared for our next video
Oh,
chat.
great, great. And Clive, moving away from markets, gold, and miners, there's another thing that I think happened in the last week that is really significant. I think it's one of the most important events, like geopolitically, and it was that SCO summit and then Xi's parade. And even Bloomberg is talking about it, and this came out today. Xi's parade and summit send a powerful message straight to Trump. So they're saying here that you know China and Russia and the other global South BRICS countries basically saying, yeah, we're gonna stand up for ourselves, and yeah, this is it's not a unipolar world anymore, and I think that's another reason why gold and commodities in general are gonna be in high demand, and the dollar is gonna not disappear, but it's going to be like pound sterling, Clive. Did you know that it was only in 1954 actually that the dollar became the major reserve currency? Up until then, the pound was still the major reserve currency. But I think the dollar as a reserve asset is going to go the way of sterling.
Yeah, I think so. By the way, Mario, did you know that the gold and silver deliveries on Kermix continue to be significantly high? I'm just showing that now. If you
Oh,
look there,
let me,
you should be able to see it now on the screen, I think.
yeah, but I was still
Oh,
had that article on.
oh, sorry, beg your pardon, Mario.
You can
Okay,
share
good.
it if you want.
Yeah, no, no, sorry, I wasn't. Well, yeah, okay, back, right, back where we were. So
But these deliveries as well, that means that people have demanded the warrants, right? But they haven't withdrawn it from the exchange, right? Yet.
Well, we don't know whether they have or not, but basically, the short has been asked to deliver the gold to the buyer. That's
Yeah,
the
yeah,
fact.
yeah.
So just show you the numbers.
Do you want to bring that up? Do you want
Yeah.
to share
So
that?
can you see that on my screen now?
Yeah, but you're putting it like where
Oh, okay. Let me try a different way. Share.
I've allowed you to share.
Oh, okay. Sorry, big pardon, Mario. I'll
Yeah.
do it that way. There. Let me just find. There we are. Okay, I found it. Share. Just a bit.
There you go.
Okay, now you got it, I think.
Yeah.
So what we're seeing here, I just bring it around, I'm just looking over here, is if you look at the gold and silver deliveries, so gold deliveries, we're only the 4th of September,
Mm.
and they're already 50% above last year's number. And silver deliveries, we're only the 4th of September, and it's 100% above last year's number.
Wow. And, I spoke to Eric Young the other day, and I posted the interview last night. And he said that some people are saying, well, now it's proof that COMEX is becoming a cash market because the open interest and the amount of metals in those vaults is like 1 to 1. But his argument is that it's not as clear cut because a lot of this eligible and registered gold and silver, they're also used sometimes for the ETFs. And I saw Clive, or I spoke to someone yesterday who actually spoke to someone at one of the big banks. I won't say the bank, but and the guy who works in the metals, and he said that the flow into GLD is in the last week or two has been massive. And GLD, I think, their holdings of gold, they're kind of mixed in with the LBMA and COMEX. So, yeah, what do you think about that, Clive?
Well, I'm getting mixed messages. I've spoken with two bankers this week about gold. I mean, basically, I'm saying to them, from an asset allocation, you should be buying gold. So one of them said to me, we've had a lot of orders from clients buying physical gold bars, and the Swiss banks, they hold them in custody, so it's on your valuation. They said we've had a lot of customers buying physical gold bars, but they haven't really put anything into asset allocation officially yet. And the other bank, the person I spoke to, he said, gold, and this was his answer. He said, gold, it's done nothing ever. And I said, well, it's a record price. Yeah, yeah, but it's always been a record price, just goes down again. So really, it was very dismissive. So I think the interest, and that's two banks. And I had a letter from a third bank, which is one of the biggest banks in the world, actually. And that bank said, we now want to put gold in the mid single digits. Those were their words. Well, I'll tell you which bank. That was UBS.
Mid-single digits in terms of holdings,
Yeah, so
like
UBS
five
are going to
percent.
5%.
What is their allocation right now?
Well, they previously had said they recommend gold, but they didn't specify an allocation.
Okay.
But this is the first time they put a percentage on it, as far as I can see.
Yeah.
But the two other banks aren't really putting it in their asset allocation yet. And one of those two banks said they got a lot of buyers, and the other one just said it's a rubbish, it's a rubbish
Yeah,
metal.
that second guy I spoke to, I think he's a bit in denial, isn't he?
Well, he's missed the boat, of course. Having said that, the second one is very, very much into the tech stocks of at the moment of Nvidia. I
Yeah.
asked him, "Do you have Nvidia?" And he said, "Oh yeah, tech is going to be the greatest thing in the future." But my word of warning on that is it's only a question of time before all kinds of competition comes out for Nvidia and other companies which are manufacturing these chips. I mean, a good example of that is the news announced today, where not Nvidia, OpenAI and Broadcom are
Mm.
going to team up to manufacture their own chips rather than relying on NVIDIA chips. Now, that
Yeah.
might take a year or two to come, but at the end of the day, there will be a lot more competition for these chips, and all these companies will find that suddenly the market supply of what they had a monopoly on is getting bigger, and the profits might not be growing as fast as people expect.
Clive, I also saw this on Zero Hedge. I couldn't read it because I'm not a premium member, but it says here, and this is from yesterday, diversify into commodities, especially gold. Goldman tells clients. So there you go. Gold bugs are celebrating this week's blue sky breakout. So I think the world's waking up to gold, and it's still early days, Clive. So I guess we're at the end of our chat here. Anything you want to tell the viewers that you think is important?
I think at the end of the day, if you want to buy gold or gold miners, I think you have to start getting in now while you still can, because there's going to come a day when everybody's going to be wanting to buy it, and we're not there. We're a long way from that. I saw a good example of this. This is the Silver Institute, not the Gold Institute. The Silver Institute estimated how much silver would be sold for investment purposes this year, or rather next year, I think this year, 2025, and they reckon it's going to be 200 million ounces of silver. So if you put that into perspective by the world population, it basically means there's going to be 1 ounce of silver for every 45 people. Now, what if not one every 45, but every one of those 45 people decide to buy an ounce? Well, you can imagine what's going to happen. So we're really absolutely at the beginning of interest in gold and silver. And, I think now is the time to be looking at getting started if you haven't started already, because it could go a lot further.
Yeah, and I would add to that one of the great ways to stack buy gold and silver bullion, not the miners, is to try to do it dollar cost averaging, or whenever you can, you have some spare savings, fiat savings, And it doesn't matter if the price is up or if it's down. I mean, when I talk to the dealers like at Gold Investments or other people, they say that generally the public they buy when the market is like booming, and when it's going down, they never come to buy. So yeah, take the opportunity to maybe buy as well when we see a sharp correction down because I don't think the fundamentals are going to change. And Clive, with that, I'm going to wish you and the viewers a great weekend.
Thanks, Mario. Thumbs up.
Thumbs up.